is an updated technical analysis on First Republic Bank, a company of the financial services sector and banks and regional here off the hourly interval, while we have the imminent arrival of the reporting period for the banks commencing this Friday and spanning the next 2 weeks. It's just really poised to have a profound impact on the market with the disclosure of financial results, data, earnings by all these select banks. I am confident that it will trigger significant movement in the corresponding bank stocks here right across the sector. Should the outcomes prove favorable, we may witness substantial gains of 50% plus or more, similar to that big pop we caught off that 60% gains off the really clear coat bottom zero fibs retracement. In the unfortunate event of unfavorable updates, reporting, data, it could potentially incite some panic, lead to a complete loss in value. This trade is undoubtedly high risk, with the potential rewards are just as equally high. In the forthcoming weeks hold the key to defining the trajectory of the original banking sector. Really big few next weeks coming in, but let's dive right into the technicals here. We have a renewed now primary uptrend line right off this 1 hour moving average, right off the 20th reactionary low there. And it's validated now. Plenty of reactionary lows to help validate it, and it has just been consolidating up pretty wildly. When consolidation is experienced in this magnitude, you usually have a pretty sizable move, and I'm talking about a very prolonged rate and pace of movement. Once a key inflection point usually gets taken out, it's usually a very powerful move when you have consolidation that lasts amongst this length and time. And really right now, bull traders, long traders, they want to see a completely take out this 50 hourly exponential moving average hovering in right up above. They have taken out the 50-day moving average, and we're sort of hovering down below. They want to see a nice clean hourly close right above that 50 exponential moving average there. And we'll zoom in here a little bit closer. We'll zoom in to find tan color code on the near term 5-minute interval where these key inflection points are. We're looking at the 50 exponential moving average hovering in up above. I'll call it 1427. We'll zoom in here to the 5-minute interval for any day traders, which correlates with the hourly 50 exponential moving average. And there we are, hovering just exclusively right amongst the 786 fibs retracement. Call it a 1423 price resistance, where we have this reactionary 29th of the March reactionary high primary downtrend line here. Again, multiple reactionary highs, solidifying that key inflection point. Where we have a triple line of inflection point, hourly 50 exponential moving average primary downtrend line, and the 1418 price resistance. Bull traders, long traders, they want to see a complete breakout above here. Finally take that key resistance out and a march right back up to retest the 1470 price resistance up above, as well as the 1 fibs retracement at 1488 price resistance. Once those levels get taken out, I believe we'll have a lot more shorts getting squeezed out. We'll have the confirmed crossover, the moving average convergence with health that has been poured and revived in a lot of these momentum indicators down below. Oscillator above its zero line, jagged inflection point, and movement in the relative strength index. Well, it looks pretty healthy as far as breakdown and setup. Bear traders, short traders, they want to see a complete breakdown, a solid hourly candle close below this primary uptrend line off the hourly here, and watch that get taken out there. We'll see. We'll kind of zoom in and kind of dictate where this price zone's at. We're looking at about 1362 price support there, where things will begin to start moving. 1362, slightly below the 618 fibs retracement key inflection point, and I really like it. 1372 price support there, cuts through some gaps, but key inflection point to watch. Again, sort of correlates with that primary trend line there, with the 200 5-minute moving average hovering down below. Amongst also the 1374 price support right up above there. So short traders, bear traders, they want to see a complete rejection amongst this key resistance, and they want to see this primary 618 fibs support level get taken out, coinciding with that primary uptrend line off the hourly interval, and a March move down to the 50% fibs retracement at 1336 price support. Call it another inflection point with where we have 1317 price support and the 1290 price support. As long as where we have the 382 1301 price support as well. So big inflection point off the 236 fibs retracement coincides with that 1251 price support. Bull traders, long traders need to defend that really at all cost, prevent a backfill the gap and a potential gap. I think we go and backfill that gap. It's going to get pretty ugly if we even reach that set stage. Well, we'll see what happens. Huge fundamental catalyst in the making, and you plan the trade out and you trade the plan. As far as the long trade goes here, you set some stops down below some of these key inflection points. moving on to that 1635 price support for a 17.4% pop, up to the 2176 price resistance for 53% in gains, up to 2984, 416% gains. So the risk reward ratio is definitely skewed to the upside in the long trade setup.